Good day, everybody. Welcome to the 18th of September, 2025. We have some great news. The Fed did cut those rates, 25 basis points. That means 1/4%. So the banks are going to be able to borrow money from each other at a much better rate. Is that going to trickle down to us? Yeah, probably not. But maybe the next two times the Fed meets, that will maybe have more impact on the mortgage rates. We will have to watch. In fact, I think there was a preemptive decision made. In fact, the mortgage rates did actually creep up just a little bit yesterday. So there's that. They already readjusted their figures for what they believed was going to happen during the Fed Fund meeting. There's a lot there to unpack. The Fed funds rate, as I had indicated before, really isn't directly tied to the mortgage rate. It's tied more to the mortgage rate's actually tied to the 10-year bond. So when more people have more faith in the 10-year bond market and are purchasing those from the government, then what ends up happening is, of course, interest rates go down. When people have less faith in it and inflation starts to creep up, then the rates go the other direction. They actually go up. So we'll have to keep an eye on this. There's going to be two more times when the Fed's meeting. Well, rumor is a couple more times they're going to revisit the Fed funds rate. There's a few other things on the chopping block, maybe getting rid of capital gains, which would be a phenomenal move, especially for the people that are needing to sell properties that are going to be slammed with capital gains tax. So that would be interesting. Also, they're talking a little bit about the taxes as well, maybe abolishing income tax. Maybe that's just Florida, but that's also very interesting to see that people are actually thinking or considering this, especially with the tariffs. Now, when inflation comes in, that does create issues all across the spectrum, and that's rumored to maybe happen as we get closer to the end of the year, but we're going to have to watch the economy. A lot of the forecasters have been completely off as far as what they thought was going to end up happening this year. As far as real estate goes, we are at 745 units for sale. That's all single family residence, townhome, and condominium. That number has been fluctuating, well, forever. But right now it's a little bit lower than typical, but also house sales have also slowed down a little bit. Some of the people out there are saying, now's your time. This is the best advantage you're going to get in real estate. Let's just stand by and watch. You should be ready to pounce if you are looking to purchase real estate. But, if you're very active right now looking at real estate, more and more properties are coming on the market, and they're still being absorbed about the same pace that they're coming onto the market. So we still have a little bit of a stagnation as far as real estate inventory. No big moves. The Fed funds rate yesterday, that particular meeting was hoped to drop it enough where it's going to have a major impact on mortgage rates, and it didn't happen. I'm Connor with Honor. Check out Santa Clarita openhouses.com. We'll see you in the next one. Take care.